Welcome back, ladies and gents. Welcome back. Joseph James here. I'm from School of Trade. I've got Marty Errico from Traders Audio along with me here this morning. Welcome back to our morning prep for crude oil futures. We're going from the screen to the floor this morning with a very unique way to start your trading day. Now, as I said earlier, my name is Joseph. I'm from schooloftrade.com. My job this morning is to provide you with a technical approach. I'm using a top-down technical approach starting with the daily chart, weekly chart, all the way down to those minute charts. And my job is to analyze everything from over the last few weeks to the overnight session, anticipating trades before they happen, anticipating direction, looking for those high percentage opportunities, and we're going to look to get started here at 8 o'clock this morning. So the morning prep that I'm going to give you is going to be using charts. I'll be using technical analysis, right, to anticipate those high percentage trades starting out at 8 o'clock in the morning. And this is just obviously a taste of what you can expect as a member of our website or of our trade room over at School of Trade. Now, once I'm done with my technical approach, I'm going to toss it all the way over. I'm here in Los Angeles. I'm going to toss it all the way over to New York City. We got Marty Errico, a fellow School of Trade student, or member, I would say, not much of a student anymore, but a graduate of the School of Trade. I've got Marty Errico here from Traders Audio. He's going to provide us with some pit analysis this morning, looking at market direction, market divergences, market internals. We'll look at some important option prices, and of course, the very important, for all of you screen traders out there, the very important pit session levels, right, that only Marty can see right from that big board on the NYMEX exchange. So we got a very interesting morning prep this morning. I'm not going to keep you guys holding on too long. Let's jump right into some charts and let's get this day going. Now, we looked at the weekly charts last week, yesterday morning. We talked about the weekly range above us. I'm going to start first this morning with the daily chart. And a daily chart, remember kiddos, if you're following along at home, a daily chart is only used to find those major turning points. Usually we're not going to use those daily charts to take trades off of. We're going to look for those major turning points. We're going to look for overall market personality. As I referred to it, the structure of the market, right? The market structure or the price structures on this wedge or on this chart. Can you see the wedge? We know that a price wedge tells me expect fake out breakouts. A price wedge gives me lower highs, right? Gives me higher lows. That tells me prices are consolidating, which means that at any moment this price can collapse and come right back down in. Now, for a price wedge, we broke out of this wedge a little early, right? If you looked at other charts or other markets, you'll probably notice that most price wedges, boy, it takes a little bit longer before it then gets very narrow and then breaks out. So the first thing we see here is this price wedge is a little suspicious. The big thing is, and you've probably heard me say this many times before, we can never expect a price wedge to be broken until we completely break the swing highs or swing lows that make up that wedge. So for example, and of course I call it a wedge, you may call it a triangle or a pennant or a flag, it's up to you. But in my humble opinion, we cannot consider this price wedge broken until I see a candle close above 99.44. So I have to see a daily candle close above 99.44 before I'll ever stop thinking this can easily slip and fall, right, and come tumbling right back down in. And since we've been watching crude oil two-sided trading over the past few weeks, boy, approaching a little over a month now, we know that anything is likely here. Anything is likely. Now, it does appear that we have a bullish tone to the marketplace right now. Summertime trading, it would make sense. Traders know that most families are going on vacations, new businesses are starting up. We just saw some fantastic consumer confidence numbers. We just saw some relatively encouraging manufacturing data. The manufacturing sector is very important for crude oil, right? They're big consumers of this black gold, right? Natural gas, things like that. So we know that we've seen bullish news. We've seen bullish tone to the marketplace recently. We also can't forget that summertime is always going to result in higher prices. It's an amazing phenomenon that we see in the summertime, guys. My personal opinion is that while all the real money is on their private mega yachts, right, going to the Mediterranean or the south of Spain, right, hanging out in Miami, while the mega yachts are, while all the smart money out there is distracted in the summertime. Don't forget, it is the third week of June. This is a quadruple witching week, so we know that traders are off on break this week, myself included. We know that with that said, while the cat's away, the mice will play, right? We always talk about that. At the end of the day on crude oil, at the end of the year on most of the markets, and in the summertime on crude. While the smart money, while the bears are busy enjoying their summer, we've got all the rookies, the retail traders, somewhat of the unexperienced speculators in the market, and there's nobody to stand in their way from pushing prices higher. So we know that price has broken above the wedge. At any moment, it can push lower. We do know we have a bullish tone, though, to the market, and we're looking for that close above 99.44 to really be able to commit to the buy side here in the long term. Now, I should also mention, if you look at your market analyzer this morning, take a look at the market analyzer. Now, a market analyzer is nothing more in NinjaTrader than a simple window that helps me compare the volume between two contracts. And so I want you guys to remember, Marty talked about this last week. The pit was rolling over last week. This week we have the electronic traders out there. We are rolling over here tomorrow. You'll notice we have the 15,000, just a little bit below the 22,000. And so we will expect contract rollover tomorrow on Wednesday. Now, think about that as well. On Wednesday morning, what do we have on Wednesdays? Inventories. We're going to have a contract rollover inventory day tomorrow in the middle of OPEX, in the middle of quad witching. Woo, right? Gives me goosebumps just thinking about it. So definitely bring your helmet, right? Eat your Wheaties and bring your helmet for tomorrow's trading. We won't have to worry about that too much today. The only thing we'll have to worry about this morning that you're going to want to be careful about is the old sharing of volume, right? The old sharing of volume between the 7 and the 8 contract. Let's keep moving over here, guys. I want to move over here now over to the 4-hour chart. The 4-hour chart's really important. We talked about the daily chart. The daily chart showed us breaking out above the wedge. Well, this 4-hour chart, you would think we struck gold here. We found a bull channel, and that bull channel has been telling us for weeks now to buy those pullbacks, and for weeks now we've been successfully trading it. If you rewind the tape, you'll see this bull channel has been here for quite some time. Now remember, we've adjusted this to anticipate using the A and B. The calculation now we get allows us to project the channel reversal zone up top here at 123. So we know that's where the buyers are pushing to. We know that's where we'll most likely end up. I don't need to remind you that much that we got that 100 big round number, right? That's the granddaddy of all big round numbers. The 100 on crude oil is something in my generation of traders that is one of the most common things we see. It's one of the most common psychological levels we've seen. All right, so with the 100 level, the 123 level, these are going to be big magnets of price overhead. So we continue to think to the bullish side. We continue to think to the buy side. But at the same time here, just like we said yesterday, we've got a few key levels. Remember this level yesterday? 98.61. Anybody remember that? Yeah, rewind the tape, go back and take a look. We told you guys about 98.61 yesterday morning. We didn't quite get to 99.29, so of course we'll wait patiently for 99.29, but keep an eye on it. So we bounced off the 98.61. Now as those, and again, these are not just one sell zone. You can see there are 1, 2, 3, 4 sell zones on top of each other here. So that creates a brick wall of supply entering the market. Now we see these big candlestick wicks, and look at the head and shoulders here we see. This head and shoulders pattern. Now, I'm not much of a head and shoulders trader, right, but I can definitely see shoulder, head, shoulder. Very easy to see that, guys, as we go up, pull back, higher high, pull back, try again and fail, and now we expect to see prices moving lower. On this 4-hour chart, I am going to expect in the short term a small bit of sideways chop as we trade inside of this buy zone you can see right at the lows here. The volume is very low this morning. You're going to see in just a few moments the range is very narrow coming out of London. So I'm going to expect this to slip around a little bit. I'm going to expect it to bounce around a little bit. But just you wait. We are most likely going to get that push lower this morning, and if I can get a buy around this 96.68, look at the combination, the confluence of support. I'm going to have demand entering the market here at 96.68. I've also got a key support zone here with the trend line. So we've got trend line support. We've got demand entering the market at 96.68. Guys, that's the perfect storm for me to be bullish in the long-term trend. So as price pulls back, I will be looking for a price reversal and a buy from 96.68. Now, you know how it goes. Sometimes we may not stop there. Maybe we keep going. 95.33, that wouldn't be far-fetched at all. I would love to find a way into a buy around 95. If we can find a way into a buy around 95, guys, I will load up big time on this trade. Notice the confluence here now. First of all, yeah, there's three levels here you want to be aware of. The first level is we have this channel, right? We get the lows of the bull channel. I would love to buy the lows of the bull channel. Second thing here is 95 to 94.12, 95 to 94.12. We get the buy zone. And then, of course, you can see 1, 2, 3, 4 different demand zones here that we're going to be trading into. So we have buy zone and trigger zone as well as channel support here. Guys, we're going to look for prices to come down and bounce. Now, boy, what would be ideal would be if prices could collapse all the way through, regain their momentum back up, and then we're going to get a signal there right at the lows. Remember, we want to get long as close to those lows as we possibly can. So I would rather see it blow right through that support, right? It doesn't matter to me if I'm right or wrong about 95. I just want to be in the trade when it goes, right? So I'm not going to worry too much about the exact specific price level that I get into. I know that in that area, though, boy, do we have an excellent opportunity. Now, also keep in mind, if we go to a new higher high today, those numbers will all change. So I'll have to make a kind of intraday adjustment on that. So if we do make a new higher high, be aware that 95 even area is going to change. Right now, though, we can easily see here short-term chop and slop, long-term buying opportunities here as we move lower. The 4-hour chart gives me a pretty good clue here this morning, but I think we can do better. Let's head over now to a 60-minute chart. I want to show you guys my secret weapon. The 60-minute anchor chart. This is that perfect combination between buyers and sellers. This is that perfect combination, between intraday and multi-day trading. This 60-minute chart is something we use every day in our live trade room. It's something I'm always watching. A lot of traders get distracted by daily charts, 4-hour charts. If there's one chart that I'm going to keep open today, this is it right here. So my 60-minute chart now tells me I've got even more reasons to be looking bullish. Now, boy, we definitely see the reason why we have sideways chop and slop in the short term. We can see the bullish channel. That doesn't take a pair of reading glasses to see. You can see the bullish channel. We can see the trend lines that we've drawn in. So trend lines are relatively easy. So we got trend lines sitting here. We've got a couple buy zones. Now, again, you could easily see 97.58, 97.31. It looks like the 4-hour chart was exactly correct in showing us that little bit. Remember I said I would expect a little bit of chop and slop here in the short term, but then would expect price to push a little bit lower here as we go lower. Okay, well, with that said now, we can see the 60-minute chart's giving us exactly what we need here to know that's definitely there. So we know that at any moment now, this price can jump higher. Okay, 60-minute chart tells me a lot more details than the 4-hour. 60-minute says, no, Joe, we've got plenty of room up to that 97.84. So we got plenty of room here to jump higher on the 60-minute. So we will be looking for a short-term bounce. At any moment, this thing can take off to the upside. I personally believe, though, we're going to pull back a little bit till 96.92 area. Remember, we talked about 96.52 before, right? We talked about 95 even down bottom here. So we have a lot of levels here that we're going to be looking for, right, to get long. What I will do is I will use a combination of the 4-hour levels along with the 60-minute levels. But in all reality, the 60-minute levels are the most important levels I'm going to use. Look at that 96.52. 96.52 just screaming at us right now. If this party gets cooking to the downside, we know what we have waiting for us. I'm looking for that price reversal, and I'm looking to get long here as we move lower. All right, looking good. If price takes off to the upside, I'm buying pullbacks. If price drops, I'm staying patient, to buy at support below me. And last but not least, let's take a look at the 5-minute chart. Oh boy, guys, the 5-minute chart does not give me a lot of good news here for you guys this morning. This is one of the most narrow ranges we've seen in, I would think, all 2013. I haven't seen a narrow range like this in quite some time. Now, people always ask me, Joe, why do you tell us about quad witching? Why do you make us aware of the dangers of quadruple witching weeks? And I explain to them, quadruple witching weeks, every 3 months, the third Friday of every 3 months is OPEX Friday, but it's not your average OPEX. This Friday is quadruple witching. Now, quadruple witching, just like triple witching, is just all 4 asset classes. We know that most OPEX days are 3 different asset classes. On quadruple witching, 4 times a year, it's all 4 asset classes. Guys, you can go right over to our blog at sidewaysmarkets.com, and you can use the search term there, quadruple witching, and you can easily find it. There's plenty of information for you on our blog. So first thing we see is that narrow trading range. Geez Louise, Joe. It looks like, did we just stay asleep? Did we never wake up this morning? That's what it looks like. Look at the candlesticks. Look at the wicks, right? I mean, incredible price action, incredible clue. This is going to tell me right away, you better be expecting sideways ranges. You better be expecting two-sided trading. You better be prepared to trade a range-bound market. Now, let's take a look at this a little bit closer, okay? Let's zoom out. You can see I've drawn a trend line overhead. This trend line actually goes all the way back to last night's high, right, or midday yesterday's high. So that trend line is definitely in play still, you can see. Okay, so that trend line tells us we get some resistance. We found a price wedge, as you can see here in the short term, but in all reality, this trend line appears to be the one that's strongest. So I'll get rid of that, the low of that price wedge. You can see that's not exactly the case anymore. Now, that trend line here may be able to turn into a channel. So what I'll do is I'll copy that trend line now that we see it's been broken, and let's see if we can get it to line up here anywhere on these technicals. Let's see. Yeah, that might be, again, just trying to find there we go. Yep, it's right there. There's your channel now. You got to look closely at the low of that wick here and then the low of the first wick there. So that's where you'll get that, right, potential channel there. I wouldn't put too much stock in that channel this morning, though. Just wanted to be a little bit proactive, though, with our trend lines. Zooming back in now, and again, we see the narrow trading range with levels above us and levels below us. Now, looking at the levels below us here, as we move lower, everything very consolidated. I have levels here at 97.41, 97.32, 97.20, 97.07, and 96.86. As you can see, all of these levels below me can be used to buy once we reverse. Now, you know my plan is always the same. I can try to get tricky and sell short down to this. I can wait for a candle to close below 97.32 and get short down to 97.20. I can try to predict. I can try to anticipate the breakout. But in all reality, these big candlestick wicks, this sideways range, this two-sided trading, this range-bound market personality, it tells me, Joe, you're better to wait patiently here, put your feet up on the desk, wait patiently, and then get the reversal later on this morning at the levels right to the downside. As we go higher here this morning, we got quite a bit of information to the upside. It's amazing we tagged that 97.71. That was easy. That was a calculation from high to low. And then we have the prior week's close on top of that reversal zone. So we got 97.75, 97.84, 97.96. I've got 98.03, 98.09. We do have a very large sell zone here at 98 even to 98.23. We get the previous week's highs above us. And we've got the 98.30, that's the reversal zone all the way up. As you can see, plenty of levels here to be selling as we go higher. I will sell the reversal zone. I will sell the 97.96. If we happen to consolidate around the prior week close, I will have to sit on hands and wait for the reversal. Those weekly closes, they oftentimes act as magnets, and price oftentimes gets slopped up on top of them. So be aware of that. The ideal short today would be up in that 98.07 area. That would be the ideal short. That's a multi-day sell zone, 98.23 down to 98.07. So that would be the ideal location here to get short. Also, we get the previous week's high. Probably have to wait to get to that previous week's high considering the volume and the two-sided trading. But hey, this is crude oil we're talking about. Who knows? So we have long-term trend is up. We have a bullish tone to the marketplace over the last few days, and we expect that to continue. Although in the short term, we really got to be patient here this morning. You can see the range. Buy those lows, sell those highs. The highest percentage trades will continue to be to the long side, and we do have the highest percentage sell here this morning, up around 98.07. I'm looking for those reversal zones to hold this morning, so be ready for them to be tested and be ready for the fake out breakout. Guys, that's all I got for you here on my end. Now it's time to head over. We're going to head all the way from Los Angeles all the way over to the NYMEX exchange, and I want to listen in to see what Marty Errico from Traders Audio, see what he's doing here this morning. Let's see if he's seeing the same sideways range-bound trading. I'm going to give Marty the control over his screen, and we'll take a look at what's going on. Good morning to you, Marty.
Good morning, JJ. Good morning, JJ. So, as I explained yesterday, just a bit in the commentary, just give me 1 second to get my screens up here. As I explained yesterday in the commentary, we talked about how the roll was a big factor to the sideways type trading that we had yesterday. You saw the very, very narrow type range that we had yesterday and really just thin type of market. Now, remember how I said we want to see a close and settle above 97 bucks, above 97 and a quarter for the next few days, right? We needed that for the next couple days to get up to 100 bucks. And now we're on about day 2 for this week. And we did see another close and settle above $97. So the reason why I say we needed a couple days of a close and settle above $97 is so we can establish a little bit of support down below. So we kind of accomplished that. And you can see the support that we established down below was 97.40. 97.40 is the pit traded chart. This is the pit session chart here. I'm just going to pull up real quickly. And at 97.40 it held from Friday. Right, Friday 97.40 holds right here. We also see 97.40 hold again yesterday. We also see today is your pivot. So 97.40, the red line there, very important level. And I believe that if we can have a pit session open above 97.40, we can be bullish today. If we can open the pit session up near that 97.40, we can buy that low. I think we can go as close as 97.40, and I think that some traders already might have bought that 97.40 level already, because if you look with me as well again here, you'll see it's the low end of this partial channel here. So looks like they come in, they buy the support below the channel, one of our highest percentage trades, right? And now they're going to probably try to ride this up. If we can stay above 98 even, we could get to a $100 level. We can get to 100 bucks. We did see into the roll, into the expiration of July futures, into the expiration of the July options contract yesterday. A lot of the traders, the big money, they target the $100 calls. They go 102, they go 105 calls. They had 60, 500, 100 calls trade yesterday, opposed to 2,000, 97 and 90 puts. So you can just do the simple math, 6,100 calls, 6,102 calls, and only 2,090 puts and 2,097 puts. So again, they do target the upside, and that's in the Augie contract. We're in the Augie contract for your options, but again, we have one more day till the roll on crude. So let's get just to our look across the board real quickly. So right now, the evidence is basically there for a little bit of a pop. Again, we have a little bit of a dip in the overnight session. We make it down to 97.40. We're looking to buy a 97.40, very simply put it. So as you can look, your crude is a little bit lower to sideways this morning, along with the Brent, RBOB, and heating oil. RBOB did have a sharp downside yesterday due to a few reasons, due to some supply outlooks and some demand outlooks, and a bunch of supply sitting around in stock. So the Memorial Day holiday didn't live up to what they thought it was going to be, and we saw reaction of that come into the play yesterday, and huge downtick in RBOB. But heating oil was still pretty much tick for tick with crude, so we kind of focus on heating oil, and we saw that multiple market divergence very, very, very working like a charm, very good, outstanding, if you will. So if you look with me here as well today, we're going to look over to the right side. We're going to look at our supply-demand differentials, and we see spreads this morning sitting rather tight. Brent crude trades around 105.30, and that was actually a low from yesterday as well. 105.20 was really a low, so we're sitting on near low prints on the Brent crude as well as the NYMEX WTI crude. The spreads have been also showing us actually just a little bit of a sideways indication. So that's why there's the sideways arrow on the spread. You can see Brent WTI. You can look at the calendar spreads. Now, calendar spreads are nothing more than July and August contract. It's just a difference between. That's all it is, guys. So we're looking at the difference between the July and August, July to September, and July and October. And as I mentioned, when the spreads get less in value, when they tighten up, contingency it's called, when they're in contango, the market will go higher, and when they're more in value, when they're in backwardation, the market will go lower. And right now, they're pretty much unchanged to a little bit of backwardation. So that's the pullback that we're speaking of. So yes, we could open up the pit session, and we could get some movement here associated with the trade right now into this first hour until the pit session open, and we could fall below 97.40, and we could use those buying opportunities that JJ we're looking at. But if we don't do anything and we chop sideways like we have been all night, we'll most likely open around that 97.40. And it held to some perfect resistance yesterday on the bell. You saw that big paper buying as they came in. They hit those 97.40s, and boom, it rose 30 ticks and even 40 ticks in a matter of 5 minutes into the close. So we want to focus on those levels. And like I mentioned, bottom line, our supply-demand differentials are lining up for a possible pop if we could stay above these levels. It's all really technically speaking at the moment because we are rolling, and there's a bunch of chop and slop in the pit. So as we roll, that's why. We're sharing volume, JJ mentioned as well. So that's why. As well, we saw a very sideways type of subdued trading day yesterday. So we have kind of an idea. We look at our currency differential, and we see the dollar is lower today. All of the other currencies are basically higher. As you can see, dollar lower, risk on sentiment. We see the other currencies a little higher, unchanged, and sideways with a risk on sentiment. So if this dollar keeps on falling, then crude can definitely trade a little bit higher as well. So that's a risk on sentiment. So those are all our supply-demand differentials, our multiple market divergence, our key factors here in this market that are going to help us predict, well, not really predict, react to what direction the market trades in. So now we're going to look at some levels here, and I also prepared some Augie levels for you all the way on the right just in case. But as I mentioned, tomorrow we're going to be rolling on over to the August contract. Will be front month August across the board, in the crude oil, Bob heating oil, and also in your crude. Crude oil, Bob heating oil, Brent, and a few other markets. Natural gas will roll later. And we'll get to natural gas because let me tell you guys about those macro funds and those hedge funds that were coming in and doing that buying. Well, we talked about that yesterday, and I bet you if you listened, you guys made a ton of money on natural gas. But, okay. All right, guys, let's take a quick look at some levels now. Real quickly, we're going to look at yesterday's high print of 98.40 was your high print from yesterday. Once again, that's 98.40, your high print from yesterday. 97.40 was the low print from yesterday. Again, 97.40 was the low print. We end up closing the day at about 97.84, and we settle at 97.75. So that's yesterday's settlement number. If you look with me here, we only had a net change of about 30 ticks to the downside, a full dollar range. That's it. Vol was falling here out of the sky in the morning when we were trading higher, and then all of a sudden volatility started building back up, and we ended up trading, unfortunately, just a little sideways to lower. So we're going to have to really watch volatility. This morning, vol is holding steady at the moment. It's not really going anywhere. So this is a pretty good indication for upside activity. Again, we had our opportunity to buy the 97.40 earlier in the day, which we showed you that one chart, and we'll get back to it later. All right, so 97.75 settlement number, volatility 19%. The OVX trades 21.04, right? Now let's talk about open interest this morning. 108,363 here in the July contract. If you look at the August contract, open interest 239,321, showing us some shorts are squeezed out of the market, right? Shorts are getting squeezed out at the moment, so as open interest is kind of adjusting as the short squeezed out. Okay, so we went over yesterday's levels. Let's look at your daily pivot real quickly. 97.88, which we are actually trading just at about daily pivot right at the moment. Again, 97.88 daily pivot we're trading right at. Resistance above, I have 98.36, right? We have 98.40, of course, yesterday's high. 98.88, and 99.88, right? We also can throw a 99.30. How about that? We'll also throw a 99.30 on top of all that. So one more level of resistance will grow a 99.30. So once again, levels of resistance above. Oops, I have for you. Once again, 98.36. I also have 98.88. We also have 99.30 and 99.88. So again, ladies and gentlemen, those are going to be your levels here for you that we want to keep an eye on. Big time here. Alrighty, guys, support down below. I got 97.36. Good buying opportunity if we do break here. Well, it's a good buying opportunity period. That's right next to the 97.40. Then we have 96.88 and 95.88. We can watch those levels as a good buying opportunity if we do get down there, but I think it's unlikely at the moment. Alrighty, guys, now over to the natural gas. This is very exciting here, natural gas. Now, guys, talking natty gas. So yesterday, natural gas. Well, Friday at the bell. Remember 2:30 at the bell, from 2:25 to 2:30. Huge macro funds and hedge funds come in and do a ton of buying in the pit. I mean, it was huge. I haven't seen anything like that in a while because natural gas is a relatively slow pit. But big macro funds and hedge funds, they come in buying. Their filling brokers come in and fill them up, and they do some excessive buying at 370 up to 375. Right? We look at the COT report. The COT showed a net long in managed money, commercial paper. So those are brokers and dealers, and then that's also managed money. So big net longs in hedge funds and managed money and in commercial paper in the natural gas. So we saw that in the COT report, and we also saw it in the pit. So that's two different places that we saw a ton of natural gas buying coming in. And we got continuation of that last night. We're getting even continuation of that this morning. Now we have 392 and 390 even is some levels of resistance above that we really want to keep an eye on that we can see a potential reversal to. But if we can break above them, we'll get right up to 395 and $4. So keep an eye on those levels for natural gas. Of course, the big fund buying comes in. We were bullish because of the inventory number. We were bullish because of the Baker Hughes rig counts. We're bullish because of the permits that are being released for us to liquefy natural gas and to send it out. And there's a big arb between prices you have to keep in mind as well in natural gas. Huge arb in prices in terms of just natty gas and the price overseas and the price that are basically around the area. So, alrighty, guys, let's continue on and let's finish off these levels here for your natural gas. Alrighty, guys, so we do have yesterday's pit session high 389.10. Your low 381.60. We have a daily pivot of 386.10. Right? We have some resistance above 390.60, 393.60, and 304.10. Support down below 383.10, 378.60, and 371.10. So we had a settlement number also yesterday at 387.5. Right now in natural gas here, before your pit session open, it's currently just trading at about 390.80, so you can see the big uptick that we had yet again today. So those are your levels there for natural gas. Those are your levels for crude, and that's pretty much it here for me, ladies and gentlemen. Again, I'm hoping everybody has a wonderful day. Come and join us here. I'll be here for you guys in just about an hour, and we will rock and roll, ladies and gentlemen, on Tuesday with some numbers that are scheduled for release. We do have a couple numbers that are scheduled for release today, which we can go over real quickly as well. I kind of want to refresh everybody's memory. There was also some chatter that there was an explosion over in Washington Pierce, but it's just speculation at the moment. We'll confirm. So we had ISES Goldman Store sales come out at 7:45, not a big market mover. We have Consumer Price Index and housing starts at 8:30, and then Red Book at 8:55. So I'll be there, guys, with those numbers. I'm going to throw it back over to JJ. Hope everybody has a wonderful day. Thanks for listening, and I'll see you guys all tomorrow.
My man, Marty, good job today, buddy. Great to have you here with us, as always. A very effective approach here from the pit this morning. Thank you so much for coming out and joining us today, Marty. As always, great to have you here with us. Guys, I want to thank you all for being here. Once again, a fantastic morning prep this morning. We've got two-sided trading. Again, as we talked about earlier, we've got potential for this price to jump. And as of right now, as I'm speaking right now, we got crude oil jumping up. I will look for that price reversal in the short term, but again, we know this thing has a little bit of pickup to its step here going to the long side. So look for those buying opportunities. Buy at support. Don't buy at resistance. Make sure you're aware of the news this morning. Be aware tomorrow is contract rollover. We will be sharing volume today. And as always, Don't forget to make sure you learn this stuff so you can earn with this stuff. Come out and see me any day of the week, Monday through Friday at 8 o'clock in the morning for our live trade room at School of Trade. Don't forget to join Marty and his partner Jeffrey over at Traders Audio. Right? That's Marty at Traders Audio. I'm JJ at School of Trade. Marty begins his broadcast in 45 minutes at 8:50 a.m. Eastern Time, and it's a very good broadcast. I would encourage you guys to tune on in at Traders Audio. Thank you so much, guys and gals, for watching. Marty, thank you for joining us from the NYMEX. And, of course, my name is Joseph here in Los Angeles. We'll see you guys in 23 hours and 30 minutes for another edition. Tomorrow we got a wacky Wednesday edition of our morning prep. We'll see you guys then. Adios, amigos. Bye-bye for now.